Good morning, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It is Monday morning, December 23, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. Stocks came roaring back on Friday on the back of favorable inflation report, though the gains didn't prevent major US indexes from ending the week lower. US stocks rallied to close out the trading week on Friday after two lackluster sessions as a cooler than expected inflation report and comments from Federal Reserve officials eased worries about the path of interest rates. The latest inflation report, in the form of the Personal Consumption Expenditure (PCE) index, showed a 2.4% rise in November on an annual basis, just below the 2.5% estimate of economists. After the data, traders raised their slightly increased expectations for Fed rate cuts in 2025. Also providing support were comments from Fed officials, with some acknowledging they were starting to factor in fiscal policy uncertainty, such as tariffs, in their outlooks. Markets had seen a major sell off on Wednesday after the Fed announced its third interest rate cut of the year, but forecast in its summary of economic projections, that is the SEP, just two 25 basis points cuts for 2025, down from its September view of four cuts in a nod to the economy's continued health and sticky inflation. This announcement had sparked a sharp sell off late on Wednesday, from which equities were unable to bounce back from on Thursday. So Friday's bounce back was welcome news to the investors, even though each of the three US major indexes declined for the week. The Nasdaq snapped a 4-week streak of gains, with the S&P 500 suffering its biggest weekly percentage decline in 6 weeks. The Dow saw its third consecutive weekly fall. For the week, S&P 500 fell 1.99%, the Nasdaq declined 1.78%, and the Dow dropped 2.25%. At close of trading on Friday, the Dow Jones Industrial Average reversed from earlier losses and rose 498 points or 1.18% to 42,841. The S&P 500 gained 63 points or 1.09% to 5,930, and the Nasdaq Composite also gained 199 points or 1.03%, 19,572. The Dow and the S&P recorded the biggest daily percentage gains since November 6. Small cap stocks, as measured by the Russell 2000, which are also seen as likely to benefit from lower interest rates, rallied 0.9%. All 11 industry segments of the S&P 500 were up for the first time since the big election day rally. The turn came despite a bevy of headwinds that knocked down international stocks and had Friday looking like another bleak day for US shares. Markets were also monitoring the US Congress as it scrambled to avert a partial government shutdown before a midnight deadline, which they eventually did. Republicans' leader in the US House of Representatives said they would vote on Friday to keep the federal government operating, which, as I mentioned earlier, they did. In other trading, disappointing trial results for Novo Nordisk sent the Ozempic makers' shares into a tailspin. Global tech stocks came under pressure, including European chip stocks like ASML and Infineon, and Taiwan's TSMC. US tech stocks such as Microsoft, Meta Platforms, and Tesla finished lower, countered by gains at Nvidia, Apple, and Alphabet. Benchmark Treasury yields declined to 4.522% after climbing for 2 days to settle at 4.569% on Thursday. Bitcoin prices bounced back to about $97,000, lifting stocks such as Coinbase, MicroStrategy, and Robinhood. Earlier this week, the cryptocurrency reached a record high above $108,000. In commodities, West Texas Intermediate crude rose 0.2% to $69.51 a barrel, and spot gold rose 1.2% to $2,623 a troy ounce. That's it for today, folks. I will see you tomorrow morning. In the meantime, please subscribe, share, and like this video. Thank you. Happy investing, stay inspired, and remember, it is all about money.